The third thing that I need you to understand about your 401k has to do with control, more particularly control from your employer and control from Wall Street. When it comes to your employer, some companies will offer you a 401k match, which says for every $1,000 you invest in your 401k, your boss is going to give you an additional $200, an additional $500, maybe even an additional $1,000. They'll match it at 100% contribution. But what you got to understand about this is some employers are going to put restrictions on how this works, meaning a vesting schedule, which says that in order for you to actually get that money and keep that money for yourself, you have to work at the company for at least 5 years. Now, every company is going to have different rules and regulations on this, but you want to understand this just in case you quit, just in case you leave, or just in case you get fired. Because this could be a way to keep you at a company longer than you might like. Now, this has a lot of benefits to you because it's kind of like free money in a sense that your employer is giving you more investment money, but I wouldn't say it's free money because you're still working for it. However, you do want to understand the controls that might be tied down to it as well. So what you want to pay attention to is your vesting schedule, meaning if you were to leave your company and your employer is giving you a match, they're giving you some money into your 401k, when do you actually get to keep that money? Because if you have to be at the company for, say, 5 years to get that money, you want to understand that and not potentially lose it without knowing you're going to lose it. So just something for you to understand. The second thing you understand when it comes to controls has to do with Wall Street. Because when you invest your money in a 401k, what you're doing is you're investing your money into a fund. You're generally not going to be able to invest in individual companies. Like you can't take your 401k generally and invest it into the Tesla stock, or Nvidia stock, or Amazon stock. What you're going to do is you're going to invest this money into a set of funds that your employer has partnered with. Now, what ends up happening here is you're pretty limited on where you can actually invest your money. Like you're not going to most likely be able to invest your money into real estate. You'd have to invest in something like a real estate investment fund if you're even given that option. And so what you want to think about and remember here is when you're investing in a 401k, this is just one vehicle. It's not your only investment vehicle. I'm going to talk about alternatives at the end of this video, but just know that you have limited control when it comes to investing with your 401k because you have to invest your money into whatever those money managers offer you. And those money managers then pretty much manage your money for the next 10, 20, 30, 40 years. And they're going to charge you a fee for every year that they manage your money, and hopefully they make you a profit. And even if they don't make you a profit, they still charge you a fee. So it's something you want to pay attention to. It's something that you want to watch because if you have very limited options, you might want to look at what your alternatives are as well. And the last thing that I want to mention here when it comes to control has to do with rolling over your 401k. So if you leave a company and now you no longer have that 401k, you might have the option to roll that 401k into something like an IRA where you have a little bit more control, where you can invest your money outside of those funds and where now you have control over the money as well. So something for you to think about, especially if you're moving from one company to another, where you're moving over 401ks as well. The fourth thing that I want you to understand has to do with limitations. And this used to be one of my biggest issues with 401ks. I've kind of softened up to them a little bit more over the past number of years, but I used to be very against 401ks. And the reason was because you were very limited on your investment options. And then I started to realize that, well, for many people, that's okay. For some people, maybe not, but for many people, it's okay. But I want you to understand that your 401k is a great place to start investing. It's not where you want to stop investing. This is your beginning to invest fund. This is that tax-deferred account to get you started with your investments, but this should not be your only or sole investment fund. So when I talk about limitations with the 401k, what I mean here is, well, kind of like what I just said, there are a limited number of places where you can invest your money. You're going to get a few funds where you can invest your money, and that's pretty much it. You can't diversify out of those things. And you might say, well, Jaspreet, well, I invested some of my money into a growth fund, into a blue chip fund, and into an emerging market fund. Aren't I diversified? And no, you're not, because all of your money is tied up in paper investments. All of your money is tied up with money managers on Wall Street. So if the stock market crashes, all of your funds go down. Maybe some will go down more than others, but you get hurt when the stock market goes down. That's not real diversification. And this is where I want you to understand that when it comes to your 401k, it's a great place for the average person to start investing. But it's a horrible place to keep all of your investments because you got to have some more investments outside of your 401k. That might include investing your money outside of your 401k into an IRA or into individual stocks, into your self-directed account. That might mean investing your money into real estate. That might mean investing your money into startups. That might mean investing your money into other alternative assets outside of these basic investments. but you have to invest your money outside of your 401k as well. So don't treat your 401k like your only investment, make it the beginning investment. And this brings me to number 5, the alternative to your 401k, because the 3 asset classes that have built more wealth than anything else in the United States over the last century are stocks, real estate, and businesses. Now, your 401k is one way that you can invest in stocks, but it's not enough. What are other ways that you can invest in stocks? Well, you can invest in stocks through something like an IRA. But that's also not the only way. You can invest in stocks yourself by opening up a brokerage and then investing in something like an index fund, a mutual fund, or an ETF. These are 3 ways to invest in groups of companies instead of investing in individual companies. You can also invest in individual companies using different brokerages, because now you can invest in companies that you believe in. But I think for the majority of America, 98% of America, you should be sticking with funds. For the 2% of America that wants to be a little bit more sophisticated, that wants to be a little bit more involved with their investments, well, then you can consider investing in individual companies. Another way is you can invest in real estate. Now, when you invest in real estate, you're looking to buy properties not to live in yourself, but to rent out to other people. These could be single-family homes. These can be apartment complexes. These can be office buildings. These can be retail buildings. These can be mixed-use buildings. These are properties you're buying not to live in or use yourself, but to rent out to other people. The third thing you can do is invest in businesses. Now, again, when you invest in stocks, you're investing in a business, but these are non-publicly traded companies. So this could be your own company. This could be other startups. There are brokerages and funds on the internet which allow you to invest in other startups. This is a way now for you to invest in newer startup type companies. But understand, this comes with the most risk, but also the most potential upside. And what you want to remember here is what I said just a minute ago. Your 401k is a great place to start investing, but please do not make that the end to your investments as well. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.